I want to acknowledge a quote, and this is one of Mark Rossano's favorite quotes, and I think it really kind of nails why we're here tonight. And here's the quote, and I've taken a little poetic license, Mark, so I hope you're not offended by this. So this is the quote. There are decades when nothing happens, and there are months when decades happen, okay? And if we all reflect on what's taken place in the world since the beginning of the year, the end of January, okay, so much has happened, so much has happened. So to this point, my first question to the panel is the following. There's a school of thought that says we're in a genuine structural reset of the commodity complex. Not a cyclical rally, but a permanent repricing driven by forces such as deglobalization, supply chain fragmentation, and a changing monetary order. And so, gentlemen, I'm going to ask Tai first. What do you think of this?
I think I'm going to go with an answer that somebody a lot smarter than me said when we asked, what a president 20 years previous, what do you think his record will be? It's too soon to tell. On the one hand, we've seen volatility in the past year and a half, in part due to the current president, but in part to a lot of other things that have happened, in recent decades that we won't know for a long time how this falls out. Are we in the middle of what people say is the fourth turning? Where every 4 generations the world changes dramatically. We're seeing some signals of that, but there and it's something we'll discuss. But people say you always get asked, is the dollar going to remain the reserve currency? I think for the remainder of at least our useful lives, it will, because there isn't anybody else, and that's the linchpin of the world order. You need. One of the things that I always talk about that I think is not obvious is one of the reasons why the dollar remains the linchpin is our massive debt. If you're the world and you need real return without a lot of risk, where are you going to go? You're going to go to the biggest debt market in the world where you can get a real return. We're 7 times the size of the European Union in terms of debt. You can get this, and you'll get your principal back. You want to go to China? Maybe you get a little extra return. Right now you don't, but are you sure you're going to get your money back? So I think as long as that remains true, and as long as we can service that debt reasonably, at least grow around the same same pace as as our debt piles up, I think it's going to remain that way. So I think we're in the middle of change, but we won't know what it's going to look like for a long time.
And so building off that, I think it's very true. Like, the U.S. is willing to run a current account deficit. And as long as we're willing to do that, we're going to be that reserve currency. The interesting piece when you start going through the iterations is rates. And rates are set everything. That's what everything begins and ends there. And we squandered the last 20 some odd years of cheap money when we should have been focusing on building infrastructure that was going to take time to get built. So now you have an iteration where we're having the 10-year at 4.5 on its way to 5%. But when you look at the commodity world has changed. And you could say, well, shale reset. It's like, yes, but it also reset the price higher. And when you look at where mining costs are, if you look at the depth in which gold, you have to dig for gold, you have to dig for copper, iron ore, the like, you've gotten a reset. And now are we really going to go back to negative oil prices? For those that remember when oil did go negative, and that was a whole lot of fun. But then you look at the shifting factors of the easy oil is gone, and we've really ignored focusing on the different oil grades. And we'll get into it, but 154 different crude grades exist. About 127 of them are actively traded. So when you look at what we consume, most of the things in this building or this room wouldn't exist without oil. And so that iteration is we are in a new cyclical change to a degree on the monetary side, but structurally speaking, this is a reset. We are resetting higher in terms of pricing. And it's really not going to stop because rates are at a point, back to the comment about China and these debt bubbles in some of these areas, where monetary policy has inflated to such a point because we refuse to take any of that monetary policy back. So QE infinity became a thing. It was sprinkled in the 80s in Japan, and then fully deployed in 98, and the US were like, let's do this as well in 08. And then you had the taper tantrum, which I was talking to Luke, my intern, about, when he was like, what happened to the taper tantrum? And you see this iteration of this free money that has now reset us to this higher level, and I really think that we're going to have cost increases that are going to remain throughout.
Thank you, Mark. And so as a follow-up to that question, I'm standing here next to two grizzled vets. Okay, so you guys have been around for a while.
That means lots of losses.
But we're still here.
Exactly.
So thinking back on your experience in the markets, is there any other period in time that you would liken to the current period? Is there any point of reference, either that you've experienced yourselves in the market or that you can call back to in history? What does the mid-2020s remind you of? Mark?
So I was going to get a PhD in economics until I realized that was a terrible idea. And I was going to focus on 1965 to 1985 because that was where you had the official death of the gold currency, of the gold peg. You had an oil crisis. You had all of these intertwined rates, commodities, currencies. And I was like, this is really interesting. You had the second wave, you have the first wave of inflation, then the second wave of inflation. I was like, this is fascinating. This is exactly the same thing. There's the history doesn't rhyme, or history doesn't repeat itself, but it rhymes. And we're in the same situation. We've had QE infinity for so long, very similar to when we officially killed the gold standard. You have these commodity cycles that have sped up incredibly fast, where you have this cyclical change, and I really think that this is what it's like. Now, unfortunately, and this is to pick on the younger guys in here, most people don't know what a rate rising cycle looks like. I was on the back end of that. When you look at when I started in 06, you had a little bit to 08, and then everybody was money is free forever. And now, how do you manage the change? And the change is really going to be something, and I really do think you have to go back to what did the 60s into the 70s look like, and why did Volcker do what he did? What was the reason? And that's why when I looked at Powell and he's like, I'm going to cut rates. Why? What do you see in the market where you're like, let's cut rates? Why are you buying mortgage-backed securities? Where do you see housing needing support? So now you have this iteration where we have these bubbles that are so big that you don't want them to burst. So how do you deflate it in a controlled manner? And I think we have to accept that deflation is going to be our friend, not our foe, when you look at the next few years.
As I think back to, and I remember the sterling crisis. I can't believe I said that out
Wow.
loud. Because that was
There it is.
Oh, yeah, that was 1992, right? And 91, 92. So but the time that, with the price action, the volatility, I would have to say the great financial crisis, where you were really trading on headlines. The first thing when I turn on the computer is I go on Truth Social and see what Trump has said, because that crappy website can't even push anything. You have to go and refresh and pull it, which is insane. So what did he say? It was just like, was there a TARP headline? Was there a ZERP headline back in 08, 09, 2010? That really changed things dramatically. And whether or not it's true, whether or not it's accurate. So you don't see that very often. I mean, I remember usually you'd say, oh wow, building permits were up a little bit. Nobody cares about building permits. It just doesn't matter. It's important, but in the great realm of things, it doesn't matter. So that period in the great financial crisis, things became, I think the word is unmoored.
Yes.
You didn't know where things were going to go.
Yes. And
you're definitely getting that feeling now. We're not in that kind of crisis, but and it's your earlier question, like the rules have changed. You don't really know what the rules are. I mean, look at it. We are profligate. The most fiscally prudent government in the world is China. They refuse to print money, and they probably need to, but they refuse.
Well, and to that point, because it's funny, every morning you wake up and you're like, who's wagging the dog? And when every morning the first thing I check is what did the JGB do in the overnight? Because the Japanese bonds are going to kind of dictate what did the BOJ step in? What happened? And that back in '08, you're like, okay, well, what drove the market in the overnight? Like, what is going to happen? And then in 11, it was, what did Draghi say? Did he say something that's going to move the market? And you always look at where you could wake up, like in 11, you could look at the bund and be like, oh, bund is down, buy S&P because S&P hasn't rallied yet. And then by 10 o'clock, the S&P was up 50 handles. And it's really, because it's so unmoored, it's what is going to move the market for the day, which is, I think, a very good way to look at it.
So, Tai, what I'd like to do is just push back a little bit on something you said a moment ago. You talked about the great financial crisis, and yes, I was here for the great financial crisis, so I can remember that. But what I also remember about that crisis was things went up and they went down. They went down and they came up, okay? And you and I had a chance to visit before. We were talking about silver. And silver has had this meteoric rise from the low teens, low 20s, whatever your frame of reference is, went up as high as $120 an ounce. And now it seems to be somewhat stable between, what, 60 and 70, maybe $80 an ounce, okay? So from that standpoint, it looks as if there has been a bit of a reset.
So silver is the worst mistress of them all, of any commodity that I have ever traded. And I don't trade certain things. I don't trade softs. I don't trade ags. I learned that from one of my first jobs was working for Swiss Bank, and they had bought O'Connor and Associates, which was a big option trade firm, and they said, we don't trade anything that eats shits or rots. We just don't trade it. We don't want to store it. We don't want to, we don't want anything to deal with it. So, I sort of follow it. I think Mark will know a lot more than I do about that. But in the things that I trade, silver is horrendous. You can trade it. You can have fun with it. You'll have good days and bad days. But
Yes.
A couple months ago, it dropped 38% in one day. One day. Right? I think it went from like 118 to, I can't remember, it was 74 or something like that, which is mad. That's not an investment, right? Go bet on the ponies. But with silver had, ran up behind gold and then outpaced gold. But there is no real economic reason, and we can go into it, I'll go into it a little bit, that silver should be at $120. People talk about EVs, they talk about solar panels, and yeah, that has tremendously increased industrial demand. But human beings are really ingenious. If things get really expensive, they figure out how to use cheaper things. So now, people say, why don't you use copper? Well, because copper oxidizes heavily when it's in heat, and it's not really stable like silver. But people figured out that they can use copper paste and coat it with silver, because copper is like $6 a pound, $6 or $7 a pound. Silver, is $75 an ounce. As a matter of fact, it's funny when you said stable, I was going to air quote that, because the other day it almost went to 90, and 4 days later it's at $73. That's a big move. So, I think silver you can play with, but boy, if you want to invest in that, I don't know. I like to sleep, so I don't really like to do it. But I do think that silver has repriced itself. I think industrially, $50, $60, $70, you can play around in there, but $100, they're going to find different ways to substitute for silver. As a matter of fact, I like copper a lot more. I don't think it's going to have that kind of move, but copper structurally, you try to build a mine, it's going to take you 10 years, and nobody wants a mine in their backyard. It's dirty, it's unpleasant, it's really hard. There hasn't been a copper project, I don't know, like a new copper project in like a generation. So I think in the future, it won't. It can probably explode, but that's a better investment than silver. But things have repriced. I think copper is one of those things that I like.
And Mark, you had mentioned 65 through, I guess it was 1980. Is that
1985.
1985.
20-year period, yeah.
And so my question to you is, most of that period, it was illegal to actually own gold, right? So from 65 through, I guess, 1980. right? Gold was still fixed at what, $35 an ounce,
Yep.
right? So isn't that period of time might that not be a good frame of reference?
Well, you had the disconnect, and the reason why is because it got to such a fractional point that it just didn't make sense anymore. And now, the reason why it's interesting is because, not to say that we're going to talk about Rickards and the case for gold, but when you start looking at the talk of do we take gold and tie it to M0, M1, M2, M3, and it's almost like do we have this reversion back to anchor inflation? And I think it's impossible because then gold would really be $65,000, not $6,500. So there's an inability, but I think the focal point was then it was how do we increase inflation, and now we're trying to figure out how do we cap inflation. And it's similar where on the back end of that, because they saw what they did, they saw a ton of missteps that happened at the Fed, and then it was how do we get in front of the debt spiral? And that was when Volcker said, we're going to 24%. He later would come out and say he should have stayed longer at 22 without having to run all the way up, but he wanted to send a message. And I think when you look at the changing of the guard, there is an acceptance, and this is coming back to your comment on Truth Social, because if you were to listen to Trump, the current Fed president option would never come in. It's like he wants to shrink the balance sheet, he wants higher rates, and I'm like, I want that guy, but Trump is kicking Powell out because he wanted lower rates, and the changing of the commentary, I think, really comes back to recognizing there were missteps and how do you get in front of it, and that's where I think it's slightly different. One of the things that I also I always love to say is that what do we do in America but invent things in arbitrage? And you just described a perfect thing, inventing and an arbitrage. It's like, why am I going to make this full piece? And you're starting to see something similar is how do we arbitrage some of these changes? And I think that's where you're starting to get into, okay, we have to accept higher rates, but how do we control that? Because we still need to spend on infrastructure. What does infrastructure need? You need base metals. You need some of these precious metals. How do we focus on financing it? Because a mine takes 10 years.
Yeah.
Like, this is not, I just put a straw in the ground and stuff comes up. This is a long-term investment, and sitting on 5% money that you need an investment on or a return on, and your hurdle rate's at 9-10%, this is going to be a big ask, and who's going to be the one to sit there or has patient money that will sit there long enough to see that return?
And no developed country will want that in their backyard. No, nobody. So it's got to be in a third world country that's corrupt, that you can bribe. Ignore the OFAC problems, but that you can bribe. It's that's why like copper, I think, is one of those things, and other things as well that it's hard to get this stuff out. But I want to I want to throw just a fly in the amber.
Please.
And this is not we're not really going to talk about AI, but one of the things that are deflationary is higher productivity. And I started using AI aggressively just a few months ago, and boy, has it increased my productivity. Now, sometimes it gets things wrong, and you have to say, that's wrong, please rethink this, and they'll fix it. And that's the danger, right? If you know what you're doing, it's like having a desk full of analysts, at your beck and call, but it's a lot faster. So what does that do for productivity? What does that do ultimately for for prices? For jobs, I don't know, but that's potentially something of a massive growth in productivity that we don't know where that's going to end up.
And to that point, so I had to do a big report on LNG, and it's funny because do I care what it thinks LNG demand is going to be in 10 years? Not particularly. Like, it's going to quote me IEA, it's going to quote me something that it's going to pull, but if I ask it, can you pull every regas facility and LNG facility, it's going to scrape 1 million websites in 5 minutes, and then it's going to ask me, how do you want that data? How do you want it cut up? How do you want me to split it? Do you want? I mean, how many people in here have killed an hour trying to fix an Excel chart? Like, you want to rip your eyes out trying to fix an Excel chart and drop about. It's like change the color. I know that I've had to Google why did that color not change? And you just ask AI and it changes. So to the point, I still question its ability to create a foresight, but the ability to speed up the research, to assemble the data, which once you get in the writing zone, isn't really the hard part. It's all of the background work, which I agree is going to be a very interesting thing going forward.
And I know we're not here to talk about AI necessarily, but one thing to keep in mind, and Tai, you and I spoke about this, and I'd love to get the opinions of members of the audience. When you think about AI, we're probably, for those of you that are baseball fans, we're in the top of the first inning on this stuff, right? I mean, not even the bottom of the first inning, okay? And this is a 9-inning game, maybe more than 9 innings, right? So just imagine that within a couple of years, to your point, Tai, and I think you're echoing this, Mark, we've had extraordinary gains in productivity as a result of this. And we're talking about intellectual productivity. This isn't moving physical stuff around, right? This isn't mechanized. This gives you the ability to extend your own mind. And I guess ultimately that is the goal of AI.
I had a great talk before about AI, and one of the things, we own power assets. So we wanted to take a long-term view of power generation with the idea that power was going to go up. And when you look at what needs to be built, we're not running those little wires. Like you're talking about 135 kV and bigger. So when you start looking at copper, and then the questionable countries, and Indonesia immediately comes to mind. I just think about like what happens and what those mines look like, and at what point do we accept that we're going to have to do something that is dirty because we need it if we're going to accelerate that AI innovation.
Well, Tai, you were talking before about, or made the statement that the countries that are likely to want to host these facilities are not developed nations. So how does China fit into this? Because one of the reasons, one of them at least, that we're behind with rare earth minerals, okay, it's not that we don't have access to those ore bodies, we just don't want them on our soil.
We don't want to refine them.
We don't want to refine them.
It's nasty, and it's dirty, and China doesn't care. I remember when they were building the Three Gorges Dam, they said, all right, we have to move like 3 million people. That's okay, move them. And, and they built that. That's half the population of Switzerland. They move half the population of Switzerland for a dam. So do they care? It's somewhere in the west of the country where they do something disgusting and dirty. They don't, and it makes them really powerful.
But not only do they not care, what they're also able to do is defy the forces of supply and demand. They're willing to fund these operations even when demand for the ore bodies is lower, right? And being commercially minded as we are in the United States, we don't do that. We don't operate that way, right? So when the demand isn't there, we shutter the mines. And as you said before, Mark, it takes years. It's not like sticking a straw in the ground, okay, and something's going to pop out. It takes years to do all this. Tai, before we move forward into energy, I just want to get 2 questions out. We talked about a little bit about gold and silver. Why don't you talk about platinum and palladium, you and Mark, for a second?
So platinum and palladium, they're part of the PGM's platinum group metals. There's rhodium. Rhodium is a small one, not really market. But platinum is actually a really interesting story. It's 10 times more rare than gold, and has almost exactly the same properties. It's inert, nothing happens to it, it'll stay forever. 75% of it comes from South Africa, which is incredibly corrupt country. I love this story, and I'm just going to tell it briefly. There was a CEO of a miner he was in his 60s, he was retiring, and he gave an interview. And he said, the problem with South Africa is when they deliver coal for our furnaces, they deliver stones in the coal on purpose because it'll break our furnace. Because once our furnace is broken, they call their cousin to come and fix the furnace. Mm-hmm. And they said, the wiring, the workers will cut the wires in the mines so their cousin can come in and rewire it. So, because everybody's got to eat. And he said, we've just got to stop that. They drove him out of the country for his safety. He left. I don't think he ever returned because what he said was the truth, and that's how corrupt it is. So anyway, 75% of this comes from South Africa. So why is it trading $2,000 and gold is trading $4,500? The reason is you only get 8-9 million ounces out of the ground a year. It's very rare. It's so rare that central banks won't buy it. It's not big enough. You can't, if you tried to buy, I want to buy, 20 million ounces of gold, you can do that. If you try to buy 20 million ounces of platinum, it'll be at 10,000. So it's so rare that it can't really be accumulated for reserves. But there's industrial uses, there's certainly jewelry uses. I mean, I own some platinum, reasonable amount of platinum. With gold where it is, I think there's a real floor under it. But platinum is, suffers from that unusual thing. And then palladium is something most people won't recognize, but it goes in the catalytic converters in gasoline cars. And it's really basically how well it does is based on how many gasoline cars we're selling. So ultimately, I think we've had a nice rally because with current administration, and there's less EV push, and I think the EV push has a certain limit. So palladium has rallied decently, but ultimately, I think the world will move towards electric and hybrid. So palladium over time, I think could be stable. It's used in other catalytic converters too. So Corning, for example, they do glass, and in petroleum, as you would know better. If they find another use for it, it could really, really rally. So I own a bit of it, not as much as I own of platinum, but those are two metals that are potentially interesting, small niche things that you have to follow the story.
Mark, what do you think?
I think it's you know way more about that than I do, but I think back to the point on cars, I think it's an important piece. And speaking of getting run out, they ran the Toyota chairman out when he leaked the 1/690 rule, where the amount of materials in one EV could make 6 plug-in hybrids or 90 hybrid cars, like true hybrids. And it all comes down to what are the materials in it, and palladium was one that was talked about. Platinum is one that when you start looking at silver and these other pieces, it was, why am I dumping all of this into an EV that has a very capped market when I could actually create 90 of these other products that are going to have much better gas mileage and a much smaller and better use of materials. But I think back to the point on central banks, it's interesting because you're watching them diversify holdings, because there's a big concern, and one of the things that we talked about earlier was about this basket. Like, what is the basket going to look like? Because I agree, do we have a Bretton Woods 2.0, 3.0? The dollar will exist and continue to be where it is, but is there going to be a basket of commodities that essentially stabilize? And that is what sits behind the dollar, where you still have the dollar, but there's a basket, and where does that fit? And it's going to be an interesting shift and see where do those precious metals, because platinum does have value, but can you find enough? And the short answer is no. So it's going to be an interesting time.
So before we pivot on to energy, I'm always interested in good stock tips. So I'm going to look at you, Tai, okay? XAU, XAG. What are your thoughts on those?
So that's the gold-silver ratio, and people talk about it all the time. It trends, pretty significantly. So it'll go in one direction steadily, and then it can reverse. But I think it's a nice talking point and soundbite for a lot of news places, a lot of news services. But if you actually look at it, it's the same chart as silver inverted, because it's gold divided by silver, and silver moves a lot more than gold in terms of volatility. So functionally, the gold-silver ratio, you're really trading silver at the end of the day. Just be aware that that's what you're doing.
Okay, very good, thank you. So let's move on to energy. Mark, what is going on? Okay.
So the thing that when you're looking at energy, so we'll break it into its pieces. So oil is obviously the one that catches everyone's eye. You don't trade oil. Like at this point, I don't know if anybody saw there was going to be an Iranian peace deal and oil dropped, and then what peace deal, and all of a sudden oil goes up. The thing that you really want to look at is what is happening within the products. because the products is really where you're going to have that stability in terms of what is the next iteration of growth. Where is that repricing that you've seen? And if you look at just diesel prices continue to make higher lows. And this is going back to 2006. When you look at just where diesel continues to re-rate, because we've shuttered a lot of our refining capacity in the U.S. That you need a basket or a slate of crude, and that crude is getting harder to find because we need heavy sour, we need medium heavies. Those are things that are very important when you're looking at the creation of product. So WTI will swing around, you'll have these movements, but diesel is really, or the distillate pool is a better focus. Like we were talking earlier, because gasoline had a crazy move, and it was a mixture of a multitude of things. It's how bad is Memorial Day weekend going to be? And it's going to be bad. Because people looked at the gas tank. We were talking about it earlier, and I was going to bring up that during 2008, they actually had to recalibrate gas tanks to calculate over $100. Because before that, $100 to fill up a gas tank? No. But now, since then, you've had this recalibration, and people, if you put in premium, God forbid you have a big tank, because you're looking at over $100.
Yes.
So now you have this iteration where people, that's a shocking number. Can most people afford it based on those that are filling up that would have a $100 bill? It's the psychological impact, and you're starting to see that. But diesel, are you not going to run trains? Are you going to not get your Amazon delivery? No, you're going to want your stuff. So diesel is a much easier play when you're looking at it, and then that comes down to the refining assets, which are very finite. And that's where you have a lot of opportunity sets when you're starting to look at it. So that's kind of that energy piece. Then you switch over to natural gas. This is where we win. And it's because we don't have the issues that you look at when you're looking at the processing. We have a ton of LNG coming online. We've de-bottlenecked in terms of Transco coming from the Marcellus Utica down. So now you have a situation where, and I was in Doha building the Qatari gas facility, so when they say it's 3 to 5 years, they're not lying. That their smallest train in Qatar is 8.5 million tons per annum, and they average about 12 million tons per annum. In the U.S., our trains average between 1 to 2.5 MTPA. Are you getting one of those facilities in Home Depot? No, but it's way less specific than something that could fill the size of this room to be replaced. So when you look at Qatar is going to be offline for a very long time.
How long?
3 to 5 years, I think 4 to 5 years.
3 to 5 years, 4 years.
In terms of, you're looking at 17.5% of the LNG market that is incapacitated. Like, it is not functioning. The U.S. could be like, this is not where I park my car and leave. It doesn't mean that the Qatari is going to flow. Like, it physically can't. Now, could the UAE start pumping oil again? Yes. Could Saudi Arabia? Oil's not the issue, it's gas. Because it doesn't float on the back of unicorns. It has to get frozen and thrown in a boat. And that's where we're going to see these issues, which, again, back to our friends in South Africa, you have a lot of opportunity with coal. And when you look at China not caring, India not caring, there's been a lot of coal capacity that's been built. But you need this little thing known as diesel to mine said coal. And in Australia, that is a big issue. And they've actually started to limit how much coal allotments they're getting. So in trying to keep Japan happy, they're telling China that they can't get their coal deliveries because they had to cut back on their mining operation. Again, back to why diesel is the best place to be.
Tai, any thoughts?
One thing I would say is, and I was taught this a few years ago, when we say diesel is the same as heating oil. So you can if you ever run out, I was taught this because he said if you ever run out of heating oil in the winter, you can get, put diesel in. It's the same thing. By God, don't put gasoline in. That's going to be a problem. But you could look at heating oil futures if you want to look at diesel. That's another way to track it. Now, obviously when you deal with futures, you have to roll, and there's certain complications that Mark will be able to tell you a lot more, and how to invest something like that. But that's my thought. We hear a lot of terms, but that's functionally diesel is heating.
Sure. Yeah. It's funny as we set this event up, and I started to do a little more reading on the various topics, reading your materials, one of the things that struck me was I never realized just how vital the Middle East, or I should say the Gulf, is. We always think of energy, right? But it's a lot more than simply energy. And Mark, I'm going to ask you, let's talk a little bit about the tentacles that energy has, okay, or that the minerals that are extracted from this region of the earth. What other, how else do they touch our lives?
Yeah, the biggest thing that you have is this misnomer that we're energy independent, and because we're not. If we were to take over California and turn it into another a useful state, we would be able to get a lot of oil that we need. If we were to make Alberta our 51st state, which everybody loves, we would be energy.
We're going to vote on that.
Yeah, exactly. They would like it. Quebec, maybe not. So we would be energy independent because we need this oil. We need what comes from it. But there's also a slate that comes out of these things like residual asphalt, things that we are so required to have. But one of the things when I was in the Middle East was how they figured out, why am I selling oil when I could sell the products? I can sell a higher margin product, and that, again, goes into the petrochemical world. Because what do we need, and that's is coming back to solar and EVs, plastic is everywhere, and it's only getting more and more focused, and you need a lot of NGLs, natural gas liquids. You need a lot of naphtha or condensate, and those are things where everyone just focuses on oil. And it's a kitschy term, it's out there, everyone talks about Henry Hub. But what about LPG? Well, propane is the most flexible molecule in the world. I can freeze it, I can compress it, it has a great BTU value, and that's something where it has a lot of flexibility, but a large part of it comes from Saudi Arabia. That is currently behind the Strait of Hormuz. Now, they do have the East-West pipeline, which the LPG line runs parallel to it, but they consume that into their petrochemicals in Jeddah. So when you look at India, which requires a significant amount of LPG, we become the solution. Because our shale gas is very light, which is why we have to export it. We really can't use it ourselves. But on the NGL side, on the condensate side, this is a massive home run. And we solidify ourselves as the best place to operate. But at the same time, when you look at plays, that's when you start getting into the midstream world. That's when you start getting into Enterprise, not the car rental company, Enterprise Partners, and Targa. Those are going to be the two guys because you want to own not only the one that's processing it, but the guy that can export it. And Mont Belvieu is the key. Targa, Enterprise, and ONEOK are the three areas that are going to control that market. And that's going to be a huge opportunity when you look at this next iteration of power and how you kind of fill in what you can't get from the LNG world.
So I realized I didn't answer your question. I got in my story. But in terms of what to invest in, your question was what stocks, right?
Sure.
So I just want to talk a little bit about the miners, the gold miners, the silver miners. So they are, generally speaking, I prefer the commodity to the miners because, as we mentioned, mining is a dirty, nasty, corrupt, tough business to do. Now, the gold miners had a wonderful year, but 9 years out of 10, they will lag the commodity. In bad years, they suffer a lot more. The junior miners, they're basically thinking if you wanted gold, but you wanted something much more volatile, you can play with the miners. It's similar with copper miners and silver miners. There are not a lot of specific silver miners out there, but mining is when, if you think that it's going to be a huge year, one way or the other, up or down, for the commodity, then you play with the miners. So I really, it's an adult swim. It's a difficult swim, to buy the producer. Unlike if you were interested in oil, basic oil is hard to trade. Maybe you want to do one of the oil majors and collect a dividend and gain slowly. But generally, certainly in the metals space, I don't do the commodity and not the miners. And I would say, by the way, if different ways to invest in gold. I'm not a conspiracy theorist. I just use the fully backed ETF. That's easy to get in and out. But if you want physical gold, the best place is Costco. You go to Costco, you buy the Pamp bar. They charge you like, depending on the day, but it's like a percent and a half over spot. And people love this Pamp bar and other bars. It's just gold, man. It doesn't really matter, but people love this bar, and that's the cheapest way to do it. Now, the other thing is, if you buy it, please don't open the packaging. If you must, open one, and you can do whatever, put it under your pillow, other things, whatever you want to do. But once you open it, if someday you'll sell it, somebody might ask you to assay it because they want to make sure it's real, because some really smart people, Chinese again, they once gold-plated tungsten, and it's about the same specific gravity. So, you ideally don't open all of them. Open one or two of them, enjoy it, but Costco is the best.
So Tai, I hear you loud and clear about miners versus the metals, okay? But would you also say that the challenge faced by the miners is also exacerbated by the fact that energy, which is a critical input, okay, is so much in flux?
Certainly that, and don't forget the next time the wage, the wage settlement, wage agreements have to come up. The union's going to say, well, you know what, gold is up here and copper is up here. We want a lot more.
Okay.
So those costs are going to go up. They won't go up immediately, but you're going to see there's a number they call all-in cost. All-in cost of producing the metal will go up for energy, but also for wages, for the royalties that some of these countries are going to demand. You're in somewhere in the Democratic Republic of the Congo today. They're going to yeah, I was getting 10%, now I want 20. Are you going to give it to me? Yeah, you're going to give it to me. And they've had, I can't remember the name of the guy or the company off the top of my head, but they wouldn't let the CEO of one of the companies leave until he agreed. So he agreed. It's a tough.
It sounds like a good way, a quicker way to resolve, business dispute, I guess, than court, right?
The interesting thing, and it comes back to cost. And when you look at rates is what people start with to say, oh, rates are up, therefore I need to get higher. Inflation is up, therefore I need to get paid. But then when you start looking at cost and things being so dirty, there is a lot of technology that's coming out where if gold was $1,000, this wouldn't be the case. But because you have so many tailing piles that are sitting unsightly, well, let's do a drill test. Let's see what's in the tailing piles. And all of a sudden, with the technology and the price, you have an economically viable option in terms of getting, now you're not going to get a new Indonesia or Chile copper mine, but you're going to get pig iron, you're going to get plant available silica, you're going to get phos, you're going to get things that we need. And funny enough, there's a lot of rare earths. And you'll be shocked to know in the 80s, we weren't very efficient at what we did. So there's a lot of things that are currently above ground that can get reprocessed. And it comes down to cost. And as I lovingly say, if you like beta, dive into some of these miners, because if you want to have a beta play, that's the beta. But just like on the energy side, you have to look at cost. Who is your lowest cost producer? And also who controls the biggest portion of it. And that's where Chevron is going to be a redirection into Venezuela. Kazakhstan, they have to leave Kazakhstan by 2040. They're already on their pivot out, but they need to replace that specific type of oil, which is Venezuela. There are 3 places in this world that you can still put a straw in the ground and oil will come out. Venezuela is one of them, Iran is another, and Libya is the third. So they aren't exactly the most stable places, but Venezuela, to the point on the fourth turning, on a socioeconomic level, on a geopolitical basis, the society had too much. And we saw that after, I was going to say Mondami, but that is probably true too, though. But when you look at Maduro, you look at what it was. People were ready for change. People were tired of it. And if you look at what it is, so now there is that push, and you will see Latin America getting a renewed focus, because you'll also be surprised that Suriname, Guyana, that seam doesn't just stop at the border. Borders are pretend, we draw lines. It also goes across that border, and there are two companies that know a lot about it. One of them is Chevron, and because of Hess, and the other is Exxon, and they are guys that know how to play in this field, and that's going to be the next growth point at this juncture.
And Mark, while you have the floor, what I do want to cover is, what do you see the connection between food supplies and energy? I think that's an important point, or important question.
Yes.
What do you see in the near term? What are some of the concerns that you have about, let's say, food stability worldwide?
So when I was raising the fund from 2019 to 2022, when we first did our first close, I did energy infrastructure, and we were going to do power and fertilizer. And people are like, how is fertilizer energy infrastructure? And then Russia crossed into Ukraine, and all of a sudden fertilizer prices exploded, and 17 urea facilities shut down in Europe. And you're like, Mark, do you know how energy intensive fertilizer is? And like, if you want me to slap you, then I could say yes. But so you've seen this iteration so many times, and it really started with Russia. That started.
And then we talk about potash. Is this potash?
So we're going to start. Well, I'll get to the potash side. We're starting with natural gas and urea. So Haber-Bosch was the first. If you ever are bored and you want to look at yields throughout history, you can go back to 1840, and you're going to see essentially a bumpy line until 1934. And in 1934 was when Haber-Bosch really perfected the creation of nitrogen synthetically. And you'll see a hockey stick in just where yields went.
And why is nitrogen important to this conversation?
So there are 4 macronutrients. There's N, which is your nitrogen, P, which is your phos, K, which is your potassium through potash, and then your S, which is your sulfur. Now, the N is going to be the most important, which is going to come from urea or ammonia sulfate, AMS. Urea is made from natural gas. AMS is made from natural gas. UAN, own it, buy it, forget you own it, and you'll just collect money for the rest of your life. So that is the key component of what needs to go into the ground. The problem is natural gas is the main input. So CF Industries will be the first to tell you that is what's going to drive everything. Then you look at phos. Phos is, as we lovingly call it, dinosaur bones. It's things that were formed during the dinosaur age. It compressed. Those are things that we are gifted in the Rockies. They're in Utah. It goes follow the Rockies all the way up into Alberta. There's this little country known as BC, which they won't let anybody go past those borders. So phos is becoming tighter and tighter. Just ask Mosaic, for anybody that's watched their earnings, where they have to mine almost 4 times what they had to previously just to make the same grade. So phos is becoming a much bigger issue. Potash is behind the Iron Curtain once again of Belarus and Russia, but there's enough potash in Canada to feed the world. Sulfur is the interesting piece because over the last 60 years, we've destroyed our soils, not on purpose, but just because a lot of this nitrogen has salt in it. If you've ever read the Bible or listened to the Old Testament, Sodom and Gomorrah is a great example of what salt does to the soil. It's not great. So you have to repair it. And how do you repair it? And that's where we start looking at these iterations, and everything is so energy intensive. Now with sulfur, sulfur no longer falls free from the sky. Acid rain, terrible for rivers and lakes, fantastic for soil. We now need to put more of it down. Over 80% of our soils are deficient in sulfur. So you're looking at this culmination of problems where the cost of fertilizer has gone to the moon. The availability of it is completely hindered by the Strait of Hormuz, by Russia, Ukraine. So where is the farmer going to get all of this? About 38% of a farmer's cost is fertilizer. That just straight up 38%. So as that price goes up, they have a finite number, which means they put down less fertilizer. If they put down less fertilizer, they do what's called nutrient harvesting. They pull the nutrients that's in the soil. For every 1 year of nutrient harvesting, it's 2 years to replace it. So you're looking at this iteration of yield decline. Now you throw in El Nino, all the fun things, or Super El Nino if you've watched the news. And you have this iteration of where prices are going, and they're not going down.
My only thought here is when you look into these small sort of niche markets, you really have to know what you're doing. I don't follow them. I'm learning a lot here. I'm probably going to ask him for to write down all those names that he just talked about, UAN or OAN. Let's have a look at those. What's beautiful about markets like those is if you know them really well, you can do very well in them, because it's not the world doesn't understand it. The world looks at copper, but actually, when I traded base metals, I actually used to like trade nickel, because you could have a knowledge edge in nickel to some extent. Everybody trades copper. There's no knowledge edge in copper, but there's a lot of knowledge edge in the things that he's just talked about that really 95% of the market doesn't know. So if you want to be very successful, pick a niche, get to know it really, really well, and you can do very well. It may not be the biggest market in the world, but it can be very profitable.
Okay. Go ahead, please.
I was going to say, and back to the point that you made earlier about knowing the drivers. And, because each thing is going to have its driver. You look at corn, you look at wheat, you look at rice. Each one is going to have its own thing. Like unless you know someone who works at Cargill or Archer Daniels, cocoa, coffee, and sugar are not for you, because they are going to know way more and your liquidity. And if your liquidity, that's not good for you. So that's where you can watch it, and it can have iterations of downstream, which can be helpful. But when you look at when you talk about the softs, the big ones to focus on are the 13 core crops. The 4 easiest ones are going to be beans, wheat, corn, and rice. And rice is the one that's going to have the biggest issue going forward, because we're in an El Nino year, and that's going to impact precipitation. And precipitation is going to be a big problem. And there's different levels of gauging, and that's where you have to know what to look for and really get into the weeds of what is going to move the market in different areas.
Okay, so in our closing moments, okay, we're going to run over a little bit here. I'm going to ask both of you to give us some thoughts on what sectors, what opportunities, what countries, as concisely as you can, are best positioned in this new environment that we find ourselves in. Okay, when you think about everything you've just discussed in terms of energy, food, precious metals, et cetera, and I think we're all in agreement that we're entering a new, I guess you said it with the Tai, fourth turning, we're in the fourth term, okay? I have the book at home. I haven't read it. It's been on the shelf for about 20 years. But what exactly, where are we going in terms of the fourth turn here? Tai, I'm going to start with you.
It's like, you're at a restaurant, and you're like, hey, Mark, why don't you go first? I mean, it's a tough, it's a tough question. I think more macro than I think micro.
That's okay. Go macro.
Helpful in this. If I look at markets, and I think for the next year or two or so, international markets have done very well. If you want to look at ETFs, right? There's an ETF called IXUS. It's basically investment grade companies, big ones outside of the U.S. It's done phenomenally. People always want to run away from the dollar. Everybody outside of the U.S. Sort of hates the dollar. It's sort of the relationship that we have with the Canadians. And I worked for a Canadian bank for a long time. They are the nicest people in the world, but they have the biggest invisible chip on their shoulders. Not so invisible right now, but invisible chip, because they look at the U.S. and they're like, you are rich and powerful and so uncultured. We're morally superior. People love to sell the dollar. People love to be able to make money anywhere else than the United States. I think that trade, will continue to work for another 12, 18 months. I think there's opportunity there where Europe needs to really ramp up, because they realize that, we actually have a threat on our hands, a real threat, and the Americans may not be here. I think a lot of people are thinking, the same thing in other parts of the world. So you're getting growth in parts of the world that, it's not, it's sort of, I wouldn't say it's unnatural, but it's not, what typically they want to do. But at the end of the day, if you're looking for a country that you want to be in for a long time, I think you want to be you do want to be in the U.S. because, in terms of technology, right, where are all the technology names? As a practical matter, the only big technology names like TSMC is in Taiwan, ASML is in the Netherlands. They make the machines that produce the chips. All the innovation is basically here, and you want to be where the innovation is. You hear a lot about market breadth, right? Oh my goodness, 7 stocks are 35% of the market. Yes, but if you look at their earnings, they're not that far behind. Those 7 stocks are probably 30% of the earnings and looking to grow. The growth factor of these hyperscalers is incredible. So where do you want to be where technology, where you can fail and come back and do something else the next day? For all our warts, I think over the long term, and I tell my kids this, who are now some of them starting their careers, you might want to invest in the haystack. Don't bother trying to figure out the needle in the haystack. That's Mark's job. Mark's really good at that. Buy the haystack and sit with it. If there's a big paradigm change, think of then you may reconsider. But over the long period, I think I want to do it.
Okay. Thank you, Tai. Mark, what about you?
I think, and this is going to support that one side, it's going to be power and energy. And when you look at natural gas, and this is where Europe decided to shoot themselves in the foot when they really can't get out of it at this point, because if you're building, and to Tai's point, like if you're building a fab shop, that is a 40-year asset. I need to know with some level of confidence what my cost is going to be because those are power pigs. You're looking at something that's going to absorb a gigawatt of power, and I need to know what my gas production is going to be and what my gas cost is going to be because that's going to dictate everything. So it's really going to shape into who has the lowest, most productive level of power, and it's going to be in the U.S. in that regard. So I lovingly call it, and because I actually own a Canadian company, I call it the snow peso, just to needle them because it's a worthless dollar. I just like, guys, what do we play with? Like, I'm talking real money. We're talking in dollars. But when you look at the next iteration, and I wrote an article back in 2014 that the Iranian regime was going to fall by 2030, and I'd be doing business in Iran by 2035. And that was looking at generational cycles, these different pivots. And I think the Middle East is ripe for the next iteration of growth. And they're very hungry. They have great IP protection as long as you're not in Saudi Arabia. So there's a lot of growth and a lot of willingness to kind of change and look at, I don't know if anyone's ever read Lexus and the Olive Tree, and you saw Japan explode and then kind of hold to almost too much towards the old world, and they're finally realizing that you can be a good Muslim, a good religious individual, and still accept technology and still excel. And there's so much growth and opportunity there. So I do think the UAE, Oman is going to be a very good place. Give Saudi Arabia another 5 years, and I think there could be a great other option. The other piece, and this comes back to food, we need 4 seasons. Like, we're relying on Brazil to essentially feed the world. And I think there's a lot of opportunity, not to say I love the politics, but when you look at Argentina and Brazil, there is a ton of opportunity in terms of mining, in terms of oil production. Guyana is just at the precipice, and I think Venezuela is going to be a massive home run. Back to the comment, though, on corruption. So we have to work our way through that. And then I think if you're smart in Asia, there's a lot of opportunity. I think Vietnam and Malaysia are in a very good position. They're looking for friends outside of China because Vietnam is tired of their shipping vessels getting sunk by the Chinese fishing vessels. So when you start looking, yeah, exactly, air quotes. So when you look at this growth, there's going to be a lot of opportunity in these areas. Vietnam has a ton of great ports, a great infrastructure for it, and then a great populace. I can touch on Africa after this because I'm going to run over, where Africa, I'm sure everybody's been told Africa's great since the 1950s. This time it's real. But there is an opportunity there. On an aggregate, though, I think emerging markets are in a ton of trouble. I think the 10-year rate is going to crush people, and their leverage is too high. And if you look at the subsidies that they have, back to diesel, back to food, back to nitrogen, there's going to be a reset when you start looking at the emerging markets as an aggregate. And I think that's going to be a big shock. Indonesia, Myanmar, obviously, is an issue. You have issues within the Central Asias. You know, there's going to be a flex point, but if you are smart on the different locations, there is a lot to happen over the next 10 years.
Well, Mark, thank you. Go
I
ahead,
want to say
John.
one thing.
Yes.
His Middle East thesis, and this is important, is demographically, they're very young. They've had a lot of kids. You know, outside of Africa, the only major country that has, you know, a birth rate above replacement rate is Pakistan. Nobody else has it. Brazil doesn't have it. There's an old comment about, you know, Brazil is going to rule the world, you know, run the world in 10 years. You know, Brazil is a country of the future, and it always will be. What was the comment? I think it was the Gaul who said that. You know, mean, but possibly accurate. But the Middle East is, you know, it has that as young people.
Very interesting. So let me ask you this, BJ, do we have time? Are there any questions from the audience? Yes, sir.
So I was at a conference last week, and Neil Howe was one of the speakers that wrote The Fourth Turning. Jim Rickards, who you mentioned, is also incidentally, he was also there too. The number that got thrown out was 2033 from the crowd, and then Neil's like, well, you know, sure, but
Yeah.
we're close. You know,
2033 for Iran.
No, like the term.
The
like
term.
The term.
Like,
Okay,
like,
got it.
like the actual, like the, yeah. What was interesting about one of the things that he was most concerned about was blackouts and its effect on markets, specifically energy.
No, it's spot on. So the fourth turning, I personally don't. So they force a U.S.-centric view across all countries, and there's three key pockets of people that fall outside of the fourth turning. One of them is actually the Middle East, and the other is Southeast Asia. Because essentially anyone that avoided World War II kind of pushed everybody into the same bucket. So that's just a long way of talking about that piece. Back to the point on Pakistan, that's a huge problem. Because if you look at Pakistan, they're actually selling black market power. And they're siphoning diesel, they're siphoning all these different things. Because there's an app, when you're in Africa, they ask you to download an app. And it gives you a forewarning of when the brownout is coming and how long it's expected to be. And the idea is that you charge everything that you need prior to the brownout so it doesn't impact you. So there is a huge issue, and this comes back to where you want to be. It's always going to come down to power. And I always break it down to Maslow's hierarchy, which is food, water, and safety safety is power. Like if you look at just what was it, the 77 blackout in New York, with that you're looking at what can happen in that point. And if you look at Lebanon, the impetus of them to say Hezbollah needs to go was blackouts. Because they were siphoning the diesel, the LPG away from the power units and using them to put the lights so that they could dig tunnels. And that's where you start getting this normalcy. So Pakistan, I'd love to sit here and tell you they're going to be the guys because they have so many opportunity, but that's the key piece. And there's no easy way to solve it because they rely on LNG. And if LNG goes too high, they are the only buyers left of high sulfur diesel. So blackouts will 100% be the driving case.
Yes, sir.
I actually have two questions. Distinctly, by the way, this was absolutely excellent discussion. I learned a lot. This is not my forte at all, but question ETF, fertilizer, anything that you can easily invest in. I just looked up. Soil is the only one, but
Yeah. So from a fertilizer perspective, if you can have a MLP, UAN. UAN is the maker of urea. They sit next to this man that you might know owns a lot of it. It's Carl Icahn, and he tends to not be bad at what he does. So he owns UAN. The other one, you want to be U.S. centric, so you should stay away from Yara. You should stay away from BASF. So the ones that you want to own are Nutrien, which is mostly U.S. and Canadian based, UAN, which is 100% U.S., but it's right next to the refiner, and there's a pipe that goes from the refiner to the urea facility. Great setup. Those are going to be the ones, and then you want to avoid Mosaic.
Nutrient is all potash.
Potash and
Potash
phos,
company.
so potash, phos, and they actually own their own retail. So Agrium and Potash Corp. Potash Corp was run by a honestly, like that camera could run Potash Corp better than he ran it. So
It's Canadian, right?
well, exactly. That's why it was run poorly. Yeah. So Nutrien bought is the aggregate of Agrium and Potash Corp. So Nutrien, UAN, CF are the three best. Now, UAN's number one for me. The moment I heard missiles were being dropped in Iran, I instantly bought UAN, Valero, and MPC. Those were my three initial purchases. I didn't even have to look to see where they were dropped. I just knew they were dropped, and I knew Iran was going to go after the Strait.
And the second question for you, Tai. Thorium reactors. Uranium, that's a big thing that's happening in India. There's like 200x. And the south of India has a lot of thorium and all that. And they think that this is going to be the future. It's 200x uranium or something, right? I don't know if you guys have any input on that.
I don't have any experience in thorium.
So thorium reactors are. I've been watching the one in China very closely because that's where the first commercial one was built. I was that guy in 2017. It was me and like 3 nuclear people, and everybody was like, "Ew, nuclear." Now it's the soup du jour, but I've always kind of been this similar to it's always the fuel of the future, but it's going to be the fuel of the future outside of the U.S. And that's where thorium has a lot of value. The problem is the salt. How do you manage the salt heat index? Because if it gets too hot, it can actually liquefy to the point that it fails, where it loses its insulation factor. So thorium managed right is fantastic. The one that's being watched closely is the Chinese one, because there's always been a concern about cracking because of the corrosion of salt. So the question is always longevity. And that's why it's going to happen outside of the U.S., but I do like thorium at this point.
We're about to get the hook, but we have a question back here.
Yeah,
Yes, sir.
Yeah, so there is a push for nuclear. That's my question before you even touched on it. But so like 3 Mile Island and these little mini, reactors that they're building. So essentially, if you look at quantum computing coming online, possibly according to Jensen Huang, about 10 years, and the time it takes to get these nuclear reactors online. And so let's say it does. Let's go with the base case that it does happen domestically. Doesn't that oversupply us with energy?
Well, so the level that you're looking at and the level of consumption, you have to look at what is being used. So if you're doing AI training, so AI training needs a utilization factor of over 90%.
Right.
So the training needs to have a significant amount of power, which is where nuclear comes in. The interface and then the queries are happening away from something like that because they only need a utilization factor between 20 and 40% of power consumption. So the issue that you have is, where am I getting such contiguous power? And that's where nuclear comes in. But in order to get the approvals, we're not building 2 gigawatt facilities anymore. You're looking at 100 to 250 megawatts. And instead of making them big, you're just going to have multiple, but it's always going to be not in my backyard. So there are always these issues in terms of oversupply versus undersupply. They're going to be dedicated, because who's going to sit there and finance it? And it's going to be Google, Apple, and those are going to be the ones to own it, and then they're going to want to keep it. The ISOs, which are the independent system operators, are happy to have them behind the meter, away from everything else, because the fluctuation on voltage is creating distortion. So how do you create more fixed distortion, inject more juice to create your alternating current, or pull big draws off the cycle? And the big draw off the cycle, so I don't think it'll create an oversupply. I think it'll be relegated to those units, and then that'll be kind of where things live, and that'll be the benefit for them, and that's how they get away from ISO approval.
And that's actually the point I wanted to make. And if there's anything that you're concerned about how well AI will grow, is that power. I think I'm much more worried about undersupply. I mean, you don't want to get into the grid, right? The grid is old, not terribly old, but not flexible. You want to supply, you need to supply, a small reactor to a bunch of data centers. Can you get that approved? Can they run properly? This not in my backyard stuff is really significant. I mean, you have people who sold jobs. And by the way, I found out that if you're an archaeology professor, the way that you make a living is you work with the NIMBY people to write up whatever random thing they need to stop development. So it's literally how they do it. Because archaeology professors, how do you make a living, right? So whether or not we can get this power online to supply AI is a big deal, and you're already seeing backlash, even in red counties, red states, about AI, about power. So I think that might be one of the things that not focused on, but could hold AI back from growing as much as it could.
And the transmission, so they figured out go next to the transmission. And so transmission wire is 70% more expensive than fiber. So the idea is create more decentralization and run fiber for the simplistic things like interface. If I want to know what time Starbucks closes before I go home, it'll route me to AI, but it's a simplistic query. Sure. If I want to know the gravitational force of X and Y black hole, that'll get routed to something separate. And you're going to get a differentiating factor. And the issue is we lied for so long, I mean the government, about the efficiencies of solar and wind. So we've had so much false hope that's built around renewables that we don't have dispatchable power. So you're going to have this duck curve, which is only going to get worse. And that's where solar kind of can fill one void, but we don't have the natural gas and coal power that we need. Nuke can be a piece of it, but we're going to need something to create that bridge on that 6 to 9:30 p.m. gap, which is huge.
So I think on that note, that's a wrap.